are you hiding in all this market sell-off? My office has been trying to reach you, and
Well, it's been a good environment to buy. Last year when the markets were just moving one way up, it's very difficult to go and find good opportunities in that environment. But in the last couple of quarters, when there's been a pressure on especially on the smaller mid caps, we're able to find opportunities to invest more. So we like environments like that.
So you're greedy right now. You don't think the tide has turned permanently in favor of large cap stocks?
No, there's nothing like a permanent shift, right? So I think if you're looking over very long terms, we always said that the market prices will respond to the fundamental improvement in companies, right? So let's say if you think about earnings as those fundamentals, if companies are able to grow their earnings, their market prices will sort of reflect that over the long term. And it's just that the valuation at which those earnings are valued, that changes from time to time, but that's noise, right? Over the very long term, if the company is able to grow its earnings, you should see that in the stock price. And so you can find companies like that, I think you're very good. And in current environments, if you're able to find them a slightly better valuation, so much the better.
In general, the view is that only a handful of small cap small businesses, they become mid-cap businesses, and only a sliver of mid-cap businesses, they become large-cap businesses. So whereas the endeavor is to find the next multi-bagger, and everybody's trying to buy the next Bajaj Finance or a Chola Mandal, in general, do you think the environment is not conducive for some of the smaller businesses and medium-sized businesses, because interest rates are increasing, commodity prices are increasing, the trade war fear is now real fear?
Yeah, so I think the challenges are always there. Nobody would allow you to become big because everybody wants to take advantage of the market. Everybody wants to grow their business. So you have to have something unique, something differentiated about your business and the way that you work, whether it's through technology, whether it's through know-how, whether it's through scale, but something has got to be different about you and your offering. And only then can you sort of grow faster than the others. And then you need to be in businesses which allow that sort of scalability, right? So you want to find companies in markets that are growing, where there's a lot of room for those markets to grow. Because if you're going to be in a very, very small sort of market, you can be a profitable business, but you can never scale it up to become 10, 15, 100 times the size of your, where you are. And so if you find that scalable business and you find a great company within that, which is a differentiated offering, and those companies can actually compound for many years to come.
How many stocks have you added, or how many new businesses you've invested in this financial year?
See, we're long-term investors, so we don't churn our portfolio very much. So in most cases, we'll add to existing positions, but selectively we'll always look to find great ideas, and it's always with a view that you find a great idea that is better than what you have in the portfolio, then you make that switch. But you want to keep that concentration. So the one very sizable investment that we made over the last 1 year was in a technology company, right? For example, but we added to many of our existing portfolio companies where we thought that the valuations have become reasonable, and it provides a good sort of risk-reward trade-off.
So where exactly have you added, and which is this technology company you acquired?
Yes, it's a very interesting area. Like if you look at the developed markets like the US over the last decade or 2 decades, so much value creation has happened through technology or internet companies, right? So you have the likes of Google or Facebook or Amazon who've done tremendous value creation. Even in developing countries, if you look at China, so you look at Alibaba, you look at Baidu, you look at Tencent, shareholders have done phenomenally well by investing in companies like that. Even in India, you've seen some value creation happening through private companies like Flipkart or Paytm. But unfortunately, the public market investors have been left high and dry. You haven't found any sort of great internet companies, e-commerce focused companies. But we know that there's a huge value migration that's going on, and it's going to happen for over the next 10, 20 years. And so we'd always been looking for the right opportunity. And the challenge always has been that even in private markets, you find companies that are growing, but they're not profitable. And there are few ones which are listed in public markets, they're profitable, they're not growing. And so we're lucky enough to find a company that sort of had both of those.
It's a listed company.
It's a private company today, but it's going to be listed fairly soon. It's called as Affle India. Affle is an AFFLE. And not many people know, but they are probably the largest mobile advertising company in India.
I didn't know about this.
Yeah, so people have heard of InMobi, for example,
Yes,
right?
yes.
InMobi has done very well, but a lot of their business is global. But within India, Affle is actually, has become the largest player.
Are they planning to go public soon?
Yeah, they should be going public over the next month, month and a half.
So
or
you have no plans to sell it when it goes public, because typically when we see pre-IPO placements, they happen. Anchor investors, they tend to sell out after the lock-in period.
Yeah, no, I don't think we have any such intention. I think this is it's a fantastic business and a fantastic company, right? So if you think about the world today and the way things are evolving, I'll refer actually to Warren Buffett's interview, I think just a few days ago, when somebody asked him about Apple and how they're sort of buying it more, and he said that an iPhone is still cheap at $1,000 for the value that it creates for people. And what he said is that the most valuable real estate in this world is actually on this phone, right? And because most people are going to be buying things over the phone, the value of being on that mobile phone is huge. And so as you look forward over the next 10 or 20 years, everybody would want their apps to be installed on the phone. And there's a huge gap between sort of advertising wanting their apps to be installed and consumers sort of acting on that. So Affle is one of those companies that has figured out the most optimum way to figure out who the likely users for the product that you have, and then what is the most cost-efficient way of targeting them. And they're able to do that, and as a result, they're quite profitable, and they're growing rapidly.
So what have you bought or added more from the public market?
So from the public markets, it's been many of the existing portfolio positions. So one of our largest ads was in Safari, something that I'd mentioned before. Luggage industry is doing very well. Within that, Safari is gaining share by virtue of being third largest player, but sort of increasing its market share over the years. And with increasing size come operating leverage, and so they're benefiting from all of those trends, right? So that's been one of our additions. We had added to the professional staffing companies that we had mentioned.
Are they expensive? Are they Quest or the others?
Yeah, so I think they had become quite expensive in between, but over the last few months, they've also come under pressure, and they've become to reasonable levels. Even again, they're expensive if you just look at trailing numbers, but if you see the level of growth and that scalability, right? These companies can easily become 10 times, 15 times, 20 times the size of where they are today. So I think given that potential, they're still fairly small.